On the program today, inflation in Zambia nears 20-year high at 31.2%. The World Bank Migration and Development Report shows 5% increase in Ghana's remittances. And Zimbabwe government begins payment of compensation to victims of land grab. You're welcome to Business Incorporated on Channels Television. I'm Ini John Mekwa. Well, we'll kick off today's show with trading numbers from the African continent. South African main index rose 0.47%, while the NGX main index rebounded at intraday. It's up 0.27%, the first time in the week. The EGX appreciated at intraday by 0.09%, while Kenya's NSE closed yesterday's session negative. And over in the Middle East, the market indexes were mostly negative. Dubai and Abu Dhabi indexes fell 0.38% and 1.01% each. Saudi Arabia was the only gainer, as its index recorded an uptick of 0.12%. Elsewhere, the Qatar index dropped marginally 0.05%. Stock markets have opened higher in Europe, supported by banking and retail stocks. Also, German business confidence has improved and is expected to get even better. Conrad has more from Frankfurt. Hello, Conrad. Good afternoon.
Good afternoon. Nice to be back on Channels TV.
Good to have you back, Conrad. Germany's Ifo index of business climate has risen to the highest level in nearly 3 years. Give us details and what are the implications for the German's economy and the market?
Yes, 101.8 points. That's the reading for this month of June of the Ifo Index of Business Climate. It's much higher than what on average economists had forecast, and the highest level since autumn 2018. Ifo says German companies are not nervous yet about higher prices and shortages of raw materials and of computer chips, for example, but that a majority of companies here in Germany are thinking about raising their prices as soon as possible. Now, of course, this is positive for these companies and for the future outlook on earnings, but it is also something that's fueling the inflation discussion again. And that's why traders here in Frankfurt, investors on the German stock market, have been taking the strong Ifo Business Climate Index with mixed feelings. On the one hand, of course, it indicates a strong business activity. On the other hand, it sort of has triggered these concerns about potentially the central banks rising their interest rates again, tightening their monetary policies. And this perspective, this possibility, of course, is putting a bit of a damper on all of the future upwards potential of the stock market.
And Siemens, Germany's largest high-tech company, has updated its strategy and sales target. What's in there for investors?
Well, the new CEO of Siemens, Roland Busch, is confident that the dividend payments will continuously flow in the coming years. At least dividends are expected to remain stable. That's an important piece of information for investors because during the Corona year last year, during the lockdowns, Siemens for the first time in many decades had lowered its dividend. Now the company wants its investors to know that they can rely on continuously and reliable dividend payments. What's more, the targets for sales and profits have been increased at Siemens. Sales in the future are predicted to rise between 5% and 7% per year. Yearly profits are targeted to rise between 8% and 10%. That's a significantly higher goal than the goals so far. Analysts' reports after these announcements are a bit hesitant to buy all this wholeheartedly. The analysts write, well, Siemens too has to deal with higher prices of raw materials. It's not a given that Siemens will be able to really demand higher prices from its customers in all business fields. What's more, after a number of mergers and acquisitions and a number of spin-offs, Siemens still has a lot of integrating work to do, of streamlining of its businesses so that all these ambitious targets can be met. And that is one reason why the share price of Siemens has not reacted very positively or overwhelmingly positively after these announcements by the new CEO of Siemens came out.
There are a lot of information there for investors, and retail investors are becoming more and more important for the markets. That's according to a study by the research team of Jefferies. Last week, during the short slump on the stock market, retail investors came back quickly and bumped more than $2 billion in U.S. stocks within one day. Is this a positive sign, or should it be taken as a warning?
Well, the quick recovery of equity prices, of course, was something that was welcomed on the equity trading floors all over the world. On the other hand, the fact that this is coming from these investors is raising a few eyebrows among professional traders. Because Jefferies also has found out that the money which was pumped into the equity market last week in the United States was taken from sales of Bitcoin. And that means that, these retail investors sort of are taking some of the volatility of the Bitcoin market into the equity market. And higher volatility, of course, is something that makes a few investors nervous. What's more, this also indicates that, it's not a long-term sustainable interest of investors that's been driving the sales of these equities. It's more a short-term speculation, ready and willing to reverse the investment decision as quickly as it, looks adequate. And that's also something that makes people here wonder how sustainable this is. It also indicates retail investors being strong, that, institutional long-term investors, large, fund companies, stay on the sidelines. And this might be because they think that the high levels on the stock markets might warrant a setback pretty soon.
All right, Conrad, thank you so much for the details. And I know the study really came out with a lot of information. Well, enjoy the rest of your day. Moving over now to the UK, Juliana is standing by. And the Bank of England has just finished their meeting. And I know Juliana has a lot to tell us. Hello, Juliana. Good afternoon.
Good afternoon, Ini.
Yeah, so the Bank of England has decided to hold policy steady, and there are also concerns about inflation.
Yeah, no surprises there. The Bank of England Monetary Policy Committee have kept interest rates at the historic low of 0.1%. Quantitative easing remains unchanged at £895 billion. That's how much they're pumping into the economy by printing all of this money. It wasn't unanimous of the 9 MPC members. The outgoing one, probably the outspoken one, the most hawkish individual, Andy Haldane, the chief economist, he voted against keeping it unchanged. He wants it dropped to about £825 billion. That's a parting shot from him to the Bank of England Governor Andrew Bailey. A few notable points. One is, yes, they have acknowledged, as well as all of the rest of the world, that inflation at the moment is slightly volatile. But again, he's doubled down on earlier statements that he's released, and also kind of agrees with his American counterpart, Jerome Powell, that this is transitory. Inflation in the UK currently stands at 2.1%. 2% is the Bank of England's target. He expects it to rise above 3% towards the end of the year, but he does expect it to fall back down. Some other notable points made by the committee is that they've increased their outlook for Q2, the quarter that we're currently in, by about 1.5%. As the economy is ticking up, as lockdown is easing, they're expecting that to gain much, much more. That would be great news for Prime Minister Boris Johnson and the Chancellor Rishi Sunak. In a quote, it says the MPC does not plan on tightening monetary policy until there is clear evidence that significant progress is being made in eliminating spare capacity and achieving the 2% inflation target. Sustainability. So pretty interesting. Nobody was really surprised. But of course, inflation is still going to be a big worry for investors, Inni.
Yeah, and how has the market reacted to this so far?
Well, we saw a slight dip in the pound, the FTSE, subdued start this morning, but it rose on those gains. And as to be expected, any talk or hint of a high interest rate is always going to pique the interest of investors in the banking markets. All the banks are up at intraday. NatWest Group up 1.37%, Barclays, Lloyds all up by about 1%, and HSBC also up by about 0.75%. The all-share is up by 0.24%. The FTSE 100 is up by 0.40%. And the FTSE 250 down by 0.38%. In the currencies market, the British pound down on the US dollar by 0.33%, down against the euro by 0.49%, and down against the Japanese yen by 0.45%, Inni.
Yeah, and away from the data and the figures now, the government has confirmed it is to introduce a pre-9 p.m. ban on junk food advertising on TV and tighten restrictions online. Well, this is bad business for advertising industry and even television stations.
Well, yeah, it could be bad for them, but it's good for those who struggle with obesity. And obesity has become a massive issue here in the UK. It's much part of a wider strategy by Prime Minister Boris Johnson, who himself said that one of the reasons why he suffered so badly with COVID at the beginning of the pandemic last year was because he was overweight. So he's really personally taken on his fitness challenges, and he wants to do that for the rest of Britain, but particularly focused on children who mostly have unsolicited access online. And before 9 p.m, when they're awake watching telly, at the moment, it's not really regulated. So you've got a lot of brands that are advertising high fats, high sugar, lots of things that are not good for you. So the government are going to be implementing this. There was rumours about this yesterday. They've now confirmed it. I've got a quote here from a minister in public health saying that we're committed to improving the health of children and tackling obesity. The content youngsters see can have an impact on the choices they make, the habits they form. And with children spending more time online, it's vital that we act to protect them from unhealthy advertising. So good thing for advertisers is you can still advertise, of course, after 9 p.m. Online, it is going to be difficult. The Times are reporting that radio and podcast adverts will be unaffected, and there's still time. This isn't going to be put into legislation until the end of next year. But overall, I think in Britain, this has definitely been received as good news.
Okay, good. Good for the health, good for everyone. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
Well, moving over now, shares in Asia-Pacific struggled for direction today with major indexes in Japan and mainland China closing flat. Mainland Chinese stocks closed mixed as the Shanghai Composite finished the trading largely flat at around 3,566.29, while Shenzhen Components dipped 0.39% to 14,784.80. Over in Hong Kong, the Hang Seng Index advanced about 0.2% as of its final hour of trading. In Japan, the Nikkei 225 ended the trading day flat at 28,875.23, while the Topix Index slipped 0.1% to close at 1,947.10. South Korea's Kospi gained 0.3% on the day to 3,286.10. Meanwhile, the S&P AX 200 in Australia declined 0.32%, closing at 7,275.30. MCSI Broadex Index of Asia-Pacific shares outside Japan rose 0.14%. We'll take a break now. When we come back, we have more stories to eat with you. Stay with us here at Business Incorporated. You're welcome back. You're still watching Business Incorporated on Channels Television. Moving over to the commodity space now. Copper is a versatile metal and a major raw materials for products spanning from coins to gun production, building materials, and significant component of electrical equipment. Needless to say, it is very useful and its usefulness can hardly be overemphasized. It's also a great commodity for investment. That's why on the London Metal Exchange, it reached an all-time high of just last month before declining 14% to trade at $9,190 per ton, that's what it's trading for presently. Well, Lawrence Messi, a research analyst with financial derivatives company, talks to us on the drivers of that price and the impact that it has. Hello, Lawrence. Good afternoon.
Good afternoon.
So we've seen the price of copper at the London Metal Exchange reach an all-time high of over $10,000 before declining. What's responsible for this volatility in the global copper market? And what's the outlook regarding the trend?
Well, to start with, the reason for this volatility is largely under three subheadings. The first is after effects of the COVID-19 pandemic, which has resulted in a lot of supply disruptions across the globe, especially in Chile and Peru, which were actually significantly impacted by the COVID-19 pandemic. Also is trade disputes, as China is the largest importer of copper in the world, and there are also reports of them increasing their stockpiling of the metal for their own production purposes and also to influence the price. And the last thing that influences the volatility is also the movement in the US dollar. So a stronger dollar is usually coupled with a lower price for a per ton of copper, while a weaker dollar would see a higher price per ton of copper.
And we see that aluminium has surpassed copper as the second best performer on the London Metal Exchange with a 21% gain. Now, is there a substitute relationship between copper and aluminium?
Yes, there is a significant substitute relationship between copper and aluminium. This is because aluminium, it has the same properties as copper, and in terms of conductivity, which is a significant property, is also really strong in that area. However, in terms of the market dynamics between copper and aluminium is 40% as conductive as copper, and it's also lighter. So despite their similarities in traits, because of this lower conductivity and also because of its lower size, which means you will need to use more aluminium to produce what maybe one rod of copper would have produced. So these present cost disadvantages, which might make producers rethink substituting copper for aluminium. Also, another fact to note is the price dynamics. So one reason for substitution is because of the higher price of copper, but also substitution will only last as long as the substitute is not rising in price. And however, aluminium is also rising in price. So these are also factors to consider to determine how heavy the substitution relationship will be.
And back here in Nigeria, we're said to have about 10 million tons of copper ore deposit, but why does it seem that it's mostly unexplored at this time?
Well, this is highly attributable to probably a lack of investment and a lack of accessibility to the required licensing to mine copper. Information from the Ministry of Mines and Steel Development shows that out of 25 registered entities, 15 of them are small-scale mining operators in copper. About 7 are have mining leases, and the last 3 are just exploration licenses. So this actually points at the fact that Nigeria has a structural problem in terms of mining operations in copper, since majority of registered entities are small-scale miners. Also, we have the issue of trading in the commodity. There's only one entity listed on the Ministry of Mines and Steel Development, and that entity's license is even expired. So that is another factor to consider. There's inadequate trading of the commodity, there's inadequate investment, and probably there's a question as to the accessibility of licenses and leasing to allow people to mine this commodity and actually use it for economic value added to Nigeria.
Well, we do hope that at this time when the country is looking to boost its non-oil export, that the country would put the structure in place. Well, thank you so much for sharing your thoughts with us, Lawrence, and enjoy the rest of your day. And moving on now, Zambia inflation accelerated to a near 90-year high in June as the cost of meat, fish, and chicken pushed up food prices. Consumer prices rose 24.6% from a year earlier, compared with 23.2% in May, while costs increased 1.3% in the month. And annual food inflation quickened to a record of 31.2% in June from 28.5% a month earlier. Zambia's currency, which has lost more than 19% of its value against the dollar in the past 12 months, has also helped fuel the inflation. The uptick in price growth may see the central bank increase its key interest rate when it meets in August. The World Bank Migration and Development Report for 2021 has reported an increase of 5% to $3.6 billion in remittances flows to Ghana, despite the lockdown in many of the remittances sending countries. Host countries for Ghanaian migrants include the United States of America, the UK, Cote d'Ivoire, Italy, Germany, and Canada. The resilience of Ghanaian migration has been commended in the face of the harsh economic impact on the top 10 remittances sending countries because of COVID-19. The World Bank had projected that remittance flows into low and middle income countries was expected to fall by 7% to $508 billion in 2020. This is followed by a further decline of 7.5% to $470 billion in 2021. 2 decades after land grab, Zimbabwe starts paying farmers. Payment of $3.5 billion agreement begins with just $1 million. Zimbabwe made its first compensation payment as part of an agreement to settle a dispute with white commercial farmers who had earlier land seized violently. The state-linked Kuvimba mining house transferred $1 million to the farmers as the government asked for a delay in paying the full $3.5 billion compensation it had agreed to pay a year ago. While the payment is still a fraction of that agreed to, resolving the dispute is key to the country pulling out of its economic stagnation that had seizures ordered by the former president, Robert Mugabe, triggered. Exports plunged. Relations with multilateral lenders were severed, and the US and the European Union imposed sanctions, and Zimbabwe expressed a bout of hyperinflation. The International Finance Corporation is set to begin a trade finance guarantee facility to Djibouti-based East African Bank to help local companies engage in cross-border trade. This facility follows an advisory services agreement signed in April 2021 between IFC and EAB that's helping strengthen EAB's risk, trade, and credit management framework and capacities in line with international best practices. IFC's trade finance facility guarantee is up to $5 million under its Global Trade Finance Program and will help EAB provide financing to importers and exporters in Djibouti, supporting the local economy and helping maintain the flow of essential goods into the country. And that's it on Business Incorporated today. Thank you so much for watching. I'm Ini John Mekwa.